But the big story this evening, the Reserve Bank of India has imposed major restrictions on Paytm Payments Bank, citing, and I quote, persistent non-compliance and continued material supervisory concerns. Now remember, in March of 2022, the RBI had barred Paytm from onboarding new customers without the RBI's permission. Now let me take you through the key highlights of the RBI's latest order. Right at the top, the central bank has barred Paytm Payments Bank from collecting fresh deposits in any customer account, including wallets and FASTags, after the 29th of February. Moreover, it also cannot initiate credit transactions after that date. Number 2, customers will be able to withdraw or utilize their available balance from their Paytm wallets, FASTags, as well as the National Common Mobility Cards. So that is clarity there. Number 3, the Paytm Payments Bank is not allowed to conduct any further banking service, irrespective of the name and nature of the service. That's important to note. Number 4, nodal accounts of Paytm's parents, that's 197 Communications, and Paytm Payment Services will also have to be terminated by the end of 29th of February. And finally, Paytm has been ordered to settle all pipeline transactions by the 15th of March. No transactions will be permitted thereafter. So that's the sum and substance of the order that's been put out by the Reserve Bank. So why has the RBI undertaken this step? Well, the order reads, and I quote, comprehensive, persistent non-compliance by the company. This is on the back of audit reports and subsequent compliance validation of the external auditors, which have revealed persistent non-compliance and continued material supervisory concerns in the bank, warranting further supervisory action. End of quote. So that is where things currently stand. How does this impact the Paytm customer and banks? Well, Yash is here now to explain that. Yash, for Paytm customers, what does this mean?
Well, Shireen, in the light of these RBI restrictions on Payments Bank, it becomes very important for customers also to understand what they can and what they can't do under these restrictions. I mean, just to compile a list in terms of how do customers behave under such restrictions. First thing, all the Paytm Payments Bank customers will be allowed to withdraw or utilize the existing wallet balance which they have without any restrictions. Second point, once that wallet balance has been utilized or withdrawn, then in that case, no further top-ups or credit transactions will be allowed to those Paytm Payment Bank wallets after February 29th. Third one, there is no curb or restriction on interest cashback refund. So if you're getting any interest cashback refund post February 29th also, there won't be any restrictions with respect to it being credited to your account. The fourth one is post February 29th, only fund transfers, bill payment services and UPI transactions will be allowed. This is very important for customers since this is very frequently used services, so there won't be any restrictions on these ones. Finally, no other banking transactions except for the 3 to 4 transactions which I spoke about will be allowed post February 29th. Now, as far as Paytm's business is concerned, there are 3 major businesses: payments, financial services and cloud and commerce. Financial services is the most attractive one, and that is the segment which gets hit the most. As far as the bank is concerned, what the RBI order means for the banks: no further deposits, top-ups on wallets. Second one, no further credit transactions will be allowed. Third one, nodal accounts of 197 Communications and Paytm Payment Services will be terminated latest by February 29th. Shireen, one very important point, RBI has spoken about non-compliance, persistent non-compliance and continued material supervisory concerns. In many previous orders, wherever these kind of terms are used by RBI, there's always this particular additional term where RBI says that, you know, the restrictions will be eased out once a compliance is done to the satisfactory point of RBI. But that particular reference remains absent in this particular order, which eventually adds more uncertainty in terms of how does Paytm Payments Bank really come out of these restrictions or, you know, sort of comply with what RBI requires out of it.
Yes, you're right, Yash. We are, of course, waiting to hear from the company. We have not heard from the company at this point in time. Lata is also here with us now. Lata, serious action there being taken by the Reserve Bank. This is a very aggressive order. Yash was pointing out what this means as far as Paytm customers are concerned. But what does this mean now for Paytm? And more importantly, a big question mark, an existential question mark for Paytm Payments Bank.
Absolutely. It is an existential question mark, almost an impossibility if things continue like this. Just to add to what Yash said, the Paytm app can continue because that app is owned by 197 by OCL. So that app continues, but it's of no use. It is like using a UPI app, or an Axis Bank app or an ICICI Bank app to do UPI transactions. It doesn't give the company any money. It's that app is still available for those consumers who want to use it. Also, you can continue to credit till February 29. So if you have a wallet or a FASTag or something, you can fill it up till Feb 29, and say you fill up a large amount, you can continue to use that FASTag for another few months till that money lasts. So all these restrictions of not taking any further deposits, etc., come into effect after 1 month. Technically, people can fill in. So there is no need to panic right now because there is no danger to the money that is in those bank accounts. You can even add to it, but after 29th, you can't add to those accounts. That's very important to note. Now, why would you do it? When you know that after 29th, you have to run down that account, why would people even deposit money in those wallets? So it clearly looks like that 1 month is given more to ease so that people don't panic and withdraw and things like that. It seems to be a concession only to avoid panic. It's very difficult to say when any certainty or any existential positivity returns to the Paytm Payments Bank. As Yash pointed out in previous instances, like for instance, when HDFC Bank was told not to onboard credit card customers, it was a period, and they were told as soon as they improve their technology, they will be able to onboard, which happened after 6 months or 9 months. Now, in this case, almost 22 months ago, they were told not to onboard customers. For the last 22 months, Reserve Bank has been doing a lot of supervision, and then they have come to an even more drastic action, very drastic action. So, it looks like, is this the end of the road? One almost wants to ask that question. You never say never, but in this case, it does look like it's gone. And, they own about 12% of the wallet market. The others are, of course, PhonePe and others. But 12% is a large market. Now, that will continue to dissipate. It will almost go into zero. So, I really can't see a future here.
Well, we will have to, of course, wait to hear from the company. I would imagine that they are assessing the impact and the implications of this order. But Dipali Pant Joshi, former executive director at the RBI, also with us. Dipali, many thanks for joining us. Persistent non-compliance, that is what the Reserve Bank has stated in its order. Dipali, what do you make of the order that's coming from the Reserve Bank, and more importantly, the implications for Paytm Payments Bank?
Well, Shireen, this was a disaster which was in the making since October 23. In October 23, Shireen, you will recall that they were fined 5.39 crores. But they were very blazed about the reasons, and for every regulator, Shireen, all over the world, it is a great concern if certain limits are breached, if KYC is not being complied with the people to whom you're offering payout services. And then these payout transactions were not at all looked at. No risk profiling of the clients as required internationally and as stressed by the RBI was done. Now the question arises that why now? Why suddenly? Well, very clearly, there was a system audit report. Now, all system audit reports are not whimsically looked at. There is an external validation of that system audit report. And that, Shireen, sadly disclosed that the same things, there was a recurring pattern. Customers were being onboarded, KYC was not being looked at, and there was persistent non-compliance. So what was the regulator to do? Why would the regulator turn a Nelson's eye to this? And this will have it is expected, will have a demonstration effect on this kind of cowboy style of working, disregarding the diktat of the regulator. So this is a stern action, and it was merited. I'm sorry to say that Paytm took no cognizance of all the warnings which were given to it several times and it was explained to it at length. Paytm officials were in touch with the RBI, my RBI colleagues. But then if you persist, then there has to be a thus far and no further state. And that's exactly where they've landed. I'm very glad that your anchor explained clearly what can and cannot be done. But as Lata also pointed out, it would be foolish to now make deposits in this account because it has been relegated to a state not even of narrow banking, it's gone beyond narrow banking. It's a clear signal from the regulator that, all right, whatever interest payments have to be made, we cannot deny as regulators, and those will be allowed. So wallets, FASTags, NMC cards, etc., till you have time till the 29th of February. But any cashback, any refunds which are due to you would be duly processed and paid to you. But after that, quite simply, no, nothing's happening. And there is a very strict line of action which the RBI has adopted for all NBFCs, for all payment banks, so that it is hoped that they would learn from quite simply, it is an example which has been made out of Paytm, that if you did not wake up when so many signals were sent to you, then this action is fully merited and justified, and regulators all over the world would say, yes, of course, the RBI had to do something. The RBI could not just sit back. If you're not looking at the KYC, you're not doing any risk profiling, it's business as usual for you. Well, it's not business as usual for the RBI.
Dipali, I just wanted to know, that's what investors in 197 will want to know. Is this a point of no return? Can the company say that we will do X, Y, and Z, and maybe after 2 months, something returns? Or do you think the record that after 22 months of supervision, the regulator comes with an even more drastic action, so it is actually end of the road? How should we read it as investors?
No. It is not exactly the end of the road. One cannot really prophesy whether it is or is not, because it depends on the compliance which the company is going to tender now. Now the company is going to go back and say that, yes, we will have another system audit, and we will plug if I was part of the company, I would say that we will plug the very obvious loopholes which you have pointed out. And these are inadvertent omissions. We have not vertently tried to, how shall I put it, not vertently tried to compromise the integrity of the financial system or of the payment systems of which we are an integral part. And we would, and if it was 197, they should plead that, there are so many customers using this service. It is the fulcrum of digital India, and so on and so forth. As for our errors of omission and commission, RBI may give us a chance, and we would prove that we are quite capable and we have the systems in place for risk profiling of customers. And this is not all customers, but yes, we do accept that in some cases where payout services were extended, we did not do the risk profiling, because that is there in black and white. That the insufficiency of the infirmity of their systems audit report with the external validation is something which is incontestable, because it is there in B&W. So what they should really do is work on these lines and essentially rectify it, not act in the blaze manner they did after October 23. And then I'm sure the regulator is ultimately reasonable, but the regulator is a responsible regulator and cannot. If you keep flouting every regulation, then of course you have a problem. You will agree, Lata, that there is a problem, a systemic issue which needs to be plugged. And has taken all steps to solve.
Well, that is what the RBI's order. That's what the RBI's order states, that it is a persistent issue of non-compliance, and which is why the RBI has acted. But as Dipali Joshi is pointing out, we will have to wait to see how the company responds to this, and of course then how the regulator decides to respond to Paytm and 197's communication in dealing with this order. Dipali Joshi, always a pleasure. Many thanks for joining us this evening to take us through what you make of the RBI's order on Paytm Payments Bank. Well,